compounding isn't glamorous. It lacks the adrenaline rush of nailing a perfect trade entry or watching your account balloon overnight. Instead, it's a subtle, almost invisible force that operates quietly in the shadows, transforming small, seemingly insignificant victories into a powerful, unstoppable wave of progress. Most people never unlock its true potential because they abandon the process too soon, pivot strategies impulsively, or demand instant results. But compounding isn't just about financial growth, it's a philosophy, a way of being that celebrates patience, rewards persistence, and thrives on an unwavering commitment to long-term growth. Every trader aspires to financial independence, yet few grasp that this freedom isn't born from a single, spectacular trade. It emerges from the steady accumulation of disciplined, modest wins that, over time, multiply into something extraordinary. Traders who achieve enduring success don't chase perfection. They simply show up, day after day, managing risk with precision and trusting time to amplify their consistency. Before we continue, make this commitment. This channel isn't about quick fixes, it's about developing traders with mental strength and discipline. If that resonates with you, join us. Subscribe now so you don't miss any of our upcoming videos. Stay until the end and keep progressing with us, one mindset shift at a time. This video isn't just another trading video, it's a mirror for your mindset. Like now, comment what resonates, and stay until the end. Because one idea here could change how you think, and how you trade. Let's go. Imagine compounding as a snowball rolling down a gentle slope. In its infancy, it's small, fragile, almost comical in its lack of presence. You nudge it forward, and the effort feels disproportionate to the outcome, a tiny ball that barely grows. The work seems tedious, the progress negligible. But with each push, it gathers more snow, gaining mass and momentum. What was once a humble effort begins to move with its own force, growing faster and larger than you could have imagined. This is the essence of progress in trading, in business, and in life itself. Early on, your efforts feel futile, your results invisible to the naked eye. But if you persist in doing the right things, making calculated trades, sticking to your plan, honoring your discipline, the trajectory shifts. The curve steepens, the momentum builds, and suddenly, the transformation becomes undeniable. The greatest challenge lies in staying the course when the results seem trivial. Risking $20 to earn $10 feels inconsequential. Saving $100 and seeing your account barely budge feels like a waste of time. Yet these are the moments where compounding takes root. It's in the quiet, unglamorous actions, the trades no one celebrates, the decisions you don't post about, that the foundation for exponential growth is laid. Those who achieve greatness aren't necessarily the most talented or the luckiest. They're the ones who refuse to stop stacking those small, seemingly insignificant wins. Even when no one notices, even when they don't feel like they matter. The human mind, however, is wired for instant gratification, craving immediate proof that our efforts are worthwhile. We want tangible results now, visible evidence that our sacrifices are paying off. When that evidence doesn't materialize, doubt creeps in. We tinker with our strategies, chase bigger risks, or abandon the plan altogether in pursuit of something flashier. This is the equivalent of uprooting a seedling to check if it's growing. You sabotage the very process you're trying to nurture. Compounding demands trust in the invisible, a willingness to believe that time will reward your consistency. It's a test of emotional endurance as much as it is a mathematical principle. Let's ground this in a practical example. Suppose you achieve a modest 1% return on your trading capital each day. It sounds unimpressive, even trivial. But if you maintain that consistency, not through luck, but through disciplined execution, your capital could double in less than 3 months. Extend that discipline over a year, and the numbers defy belief. ballooning into figures that seem almost fantastical. The catch? Most traders can't stomach the slow grind. They'd rather swing for a 20% gain today, risking burnout or catastrophic loss, than commit to the steady 1% that builds empires. The slow path feels monotonous, even humiliating, until hindsight reveals its brilliance. Before we dive deeper, let's pause for a moment. Are you grappling with fear, self-doubt, or the urge to overtrade? The reality is that most traders don't fail because their strategies are flawed, they fail because their psychology betrays them. That's why I wrote Master Your Mind, Master Your Trades, an ebook designed to equip you with practical tools to tame your emotions, sharpen your discipline, and trade with the clarity of a professional. If you're ready to elevate your trading game, check the link in the description or pinned comment and grab your copy today. Now, let's continue exploring the quiet power of compounding. Compounding is the universe's way of rewarding those who prioritize consistency over intensity. It doesn't care about the size of your starting capital or the brilliance of your strategy. It cares about your ability to endure, to keep showing up when the rewards feel distant. You could have the most sophisticated trading system in the world, but without the patience to let it unfold, its potential remains locked away. Compounding is as much a psychological journey as it is a financial one. It's not just about crunching numbers, it's about cultivating the emotional resilience to trust the process when the world screams for instant results. Traders often fall into the trap of believing that more capital would solve their problems. If I had $10,000 instead of $100, I'd be making real money, they tell themselves. But this is a delusion. The ability to compound wealth isn't tied to the size of your account, it's tied to the strength of your discipline. If you can't grow $100 with consistency, you won't grow $10,000. The habits, the mindset, the emotional control, these are forged in the crucible of small accounts, where every decision carries weight. Those who learn to protect and nurture modest capital earn the right to manage larger sums. The principles remain unchanged, whether you're trading hundreds or millions. The difference lies in your ability to master yourself. What sets elite traders apart from the rest isn't their win rate or their market genius. It's their ability to let small wins accumulate without derailing themselves. Most traders sabotage their progress just as compounding begins to take hold. A string of losses prompts them to break their rules. A drawdown tempts them to double their risk to catch up. Frustration leads them to abandon trading altogether. But compounding doesn't demand flawless execution, it demands stability. You can lose half your trades and still build wealth if your winners are maximized and your losses are contained. Risk management isn't a suggestion, it's the bedrock of exponential growth. This principle of compounding extends far beyond the trading desk. It governs habits, learning, relationships, every facet of human endeavor. The person who reads 10 pages a day will devour more books than the one who binges sporadically. The individual who exercises for 15 minutes daily will outpace the one who trains furiously once a month. The power lies not in the magnitude of the effort but in its relentless repetition. Compounding feels almost magical when it finally clicks, precisely because it defies our natural instincts. It seems unfair, as if time suddenly becomes your ally after years of feeling like an adversary. But this shift only occurs after you've endured the flat, frustrating part of the curve, the part that tests your patience, your resolve, your faith in the process. Most people never reach the exponential phase because they abandon the journey during this initial slog. They quit when the curve feels flat, when progress seems non-existent. Picture it like this: the first 90% of the compounding process is invisible, a silent accumulation of effort that yields no obvious reward. The final 10% feels like a miracle, a sudden explosion of growth that outsiders attribute to luck. But luck is a bystander in this equation. The real catalyst is your willingness to stay in the game long enough for your discipline and the mathematics of compounding to converge. You've likely seen this in trading accounts. Someone grinds for months, growing their capital slowly, methodically. Then, seemingly out of nowhere, they hit a winning streak, not because fortune smiled, but because their consistency finally aligned with opportunity. That's when compounding delivers its reward, when preparation meets momentum. But this moment of alignment requires emotional fortitude. Small wins are the building blocks of compounding, but they're also the hardest to celebrate. A $10 profit doesn't spark joy. A 1% gain doesn't make you feel like a market wizard. Yet these modest victories are everything. They reinforce your confidence, proving that progress is possible. They anchor your emotions, keeping you grounded when the market tempts you to chase miracles. When you learn to value these small, consistent gains, you stop craving erratic, oversized wins. That shift in perspective is when compounding becomes an unstoppable force. Protecting these small wins is non-negotiable. Every time you deviate from your trading plan, over-leveraging, chasing a loss, or ignoring your stop-loss, you erode the foundation you've built. Compounding is a double-edged sword. It can amplify your profits or magnify your mistakes. Risk management is the shield that ensures you're compounding in the right direction. A trader who avoids catastrophic losses can afford to grow slowly, knowing they'll never need to claw their way back from ruin. In the end, compounding is a deeply human endeavor. It's not about candlestick patterns, percentages, or algorithms. It's about character. Can you remain calm when others are swept up in frenzy? Can you stay disciplined when progress feels futile? Can you trust that your small, unremarkable actions are laying the groundwork for something monumental? That's the divide between those who dream of wealth and those who build it. The secret to wealth isn't buried in complex strategies or insider knowledge. It's hidden in the mundane, in the repetition of small, intentional actions. Those who embrace this truth don't just grow their trading accounts, they transform their lives. They begin to see success not as a fleeting moment of triumph but as a rhythm, a steady cadence of disciplined choices. Each day you show up, each trade you execute with precision, adds another note to this melody. Over time, the music of compounding begins to play on its own, a symphony of growth that requires no fanfare. Most people will never hear this music. They'll quit before the first note, discouraged by the silence of slow progress. But if you can master patience, discipline, and consistency, the reward transcends money. It's the quiet confidence that your future is compounding, even as you sleep. If compounding is the silent architect of wealth, then emotion, ego, and impatience are the saboteurs that dismantle it. These are the thieves that steal your progress, not in dramatic heists but in subtle, insidious ways, eroding your foundation day by day. Every time you break a trading rule, chase a loss, or act out of fear rather than logic, you disrupt the delicate flow of compounding. The damage isn't just financial, it's psychological, unraveling the trust and discipline you've worked so hard to build. Most traders know how to make money. The mechanics of a profitable trade aren't a mystery. The real challenge is keeping it, preserving the gains you've Earned through emotional control. A single impulsive decision, over-leveraging on a sure thing, revenge trading after a loss, or risking more than your plan. Allows, can undo weeks of disciplined effort. Compounding doesn't die from ignorance. It dies from emotion. Let's start with impatience, the first and most pervasive enemy. Impatience is the itch to accelerate results, to skip the grind and leap straight to the payoff. It's the voice that whispers, "You're falling behind. Do something bigger, faster, now." You see it everywhere, in the gym, where people abandon their routines because they don't see results in 2 weeks, in entrepreneurship, where founders pivot strategies because their venture hasn't gone viral in a month, in trading, where a solid system is discarded after a handful of losses. Compounding is merciless to impatience. The market operates on its own timeline, indifferent to your urgency. When you force trades to feel productive, you trade emotion, not probability, sacrificing the mathematical edge that compounding provides. Impatience is deceptive, often masquerading as ambition or hustle. It convinces you that taking another trade, increasing your risk, or switching strategies is a sign of hard work. But compounding doesn't reward busyness, it rewards precision. Every unnecessary trade dilutes your focus. Every oversized risk delays your progress. A disciplined trader understands that compounding isn't about what you achieve today, it's about safeguarding what you can achieve tomorrow. Forcing a trade to speed things up is like borrowing against your future profits. You might feel a temporary thrill, but the interest comes due in the form of regret, drawdowns, and shattered confidence. Next, we confront emotion, the heartbeat of trading's humanity and its greatest liability. The market is a master manipulator, designed to exploit your feelings. Fear pushes you to exit a trade prematurely. Greed tempts you to hold beyond your plan. Anxiety freezes you at the moment of entry. Euphoria fuels reckless overtrading. The markets. Volatility is a psychological gauntlet, testing your ability to remain steady while others lose their footing. Compounding thrives in a calm mind, where consistency can take root. But when emotion dominates, stability crumbles, and with it, the rhythm of growth. The goal isn't to become an emotionless robot. Emotions are inevitable, even for the most seasoned traders. The key is to prevent those emotions from dictating your decisions. Professional traders feel fear, excitement, and frustration, just like anyone else. What sets them apart is their ability to recognize emotions as signals, not directives. They can feel the pull of greed and still take their profit at the planned exit. They can sense fear and still hold a position that aligns with their strategy. This is response control, the ability to act logically, despite the emotional noise. Without it, a single moment of weakness can disrupt your compounding rhythm. Consider a trade that's up 50 pips. Your plan calls for an exit at 70, but greed whispers, this could run to 100. Then the market reverses, and you close with just 5 pips. That moment doesn't just cost you pips, it costs you trust. You second-guess your plan, your edge, yourself. Once trust erodes, consistency falters, and compounding stalls. Emotion thrives on the illusion that the present moment is more critical than the long-term plan. It convinces you that this trade, this day, this feeling defines your success. But compounding operates on a different scale, valuing the aggregate of your actions over time, not the intensity of a single decision. Finally, we face ego, the most insidious enemy of all. Ego is the voice that insists you're smarter than the market, that you can bend the rules just this once and escape the consequences. It's the belief that your talent or intuition can outweigh the mathematics of risk. Ego doesn't announce itself with fanfare, it creeps in through small, seemingly harmless choices, taking a trade to prove you're right, risking more to recover a loss, or ignoring your stop-loss because you know the market will turn. These are the silent assassins of compounding, eroding your discipline one compromise at a time. Ego is the antithesis of compounding because it prioritizes validation over growth. When ego drives your trading, you measure success by short-term wins, not long-term progress. You take risks to soothe your pride, not to protect your capital. The irony is stark: the moment you trade to protect your ego, you stop trading to protect your account. Great traders share a common trait: they don't need to be right. They need to be consistent. They've made peace with losses as part of the process, refusing to let a small setback spiral into a catastrophic one. Ego seeks applause now. Compounding seeks results later. Ego is loud and emotional, compounding is quiet and logical. Ego demands to be seen, compounding thrives in obscurity. The psychology of compounding requires a fundamental shift in identity. You must evolve from a trader chasing wins to a trader stewarding a process. You stop obsessing over today's profit and loss and start focusing on the trajectory of your growth. Losses become tuition, not failures, each one a cost of staying in the game. Compounding doesn't care about individual trades, it cares about survival. You can only multiply what remains. That's why avoiding large losses is more powerful than chasing big wins. The math of compounding only works if you're still standing when the curve begins to steepen. The market doesn't reward brilliance, it rewards endurance. You don't need to outsmart the charts, you need to outlast them. Traders who let emotion, ego, and impatience run their accounts into the ground. Picture two traders, each starting with $1,000. Trader A risks 1% per trade, wins 55% of the time, and stays disciplined for a year. Trader B risks 10% per trade, wins 70% of the time, but succumbs to emotional whims, doubling down after losses, chasing revenge trades, or abandoning the plan during drawdowns. After a few months, Trader A's account grows steadily, perhaps to $1,500. Trader B experiences wild swings, $2,000 one week, $500 the next. By year's end, only one trader still has an account. That's compounding in action, not flashy, but relentless. Ego despises slow progress. Emotion recoils at uncertainty. Impatience loathes waiting. These are the reasons most traders fail to build wealth, not a lack of knowledge, but an inability to silence these internal adversaries long enough for compounding to work its magic. When the urge to overtrade strikes, remind yourself that compounding is at work, even when you can't see it. Every day you stick to your plan, even without blockbuster profits, you're building momentum. The curve may feel flat now, but beneath the surface, growth is quietly taking shape. The hardest part of compounding isn't the math, it's the mental marathon. It's learning to stay composed when you're bored, humble when you're winning, and disciplined when you're frustrated. The best traders aren't emotional warriors battling the market, they're emotional architects, designing systems to shield themselves from their own impulses. They use fixed risk percentages, enforce daily loss limits, and track their trades not for vanity but for clarity. They know the market's greatest weapon isn't volatility, it's the emotional chaos it provokes. Compounding doesn't just multiply money, it multiplies behavior. Every disciplined action strengthens your mental resilience. Every emotional lapse weakens it. Over time, your habits compound, shaping your results as surely as your trades. Here's the paradox: compounding builds wealth by making you predictable, even boring. The more disciplined you become, the less your trading feels like a roller coaster. The less you chase excitement, the more consistent your outcomes. What once felt like a slog becomes a force of nature, unstoppable in its quiet persistence. Ultimately, compounding isn't about the trades you take, it's about the trader you become. It's a battle between two versions of yourself, the impulsive one craving instant results and the disciplined one who trusts in time. Each day, one of them gains ground. The one you nurture compounds, for better or worse. The emotional trader compounds stress, doubt, and losses. The disciplined trader compounds patience, confidence, and profits. The real question isn't what strategy you're using, it's what you're compounding every day. Time is the ultimate edge in trading, dwarfing leverage, indicators, or entry signals. It's the invisible force that separates those who build wealth from those who burn out chasing it. Wealth, discipline, and mastery are all byproducts of patience, yet most traders underestimate how long consistency takes to bear fruit. They expect their skills to translate into immediate profits, as if trading were a vending machine dispensing rewards on demand. But the market doesn't operate on human timelines. It's a marathon, not a sprint, and it rewards those who can endure the long, quiet stretches of effort. The market punishes those who chase quick fixes, luring them with the illusion of easy wins only to strip them of their capital. Delayed gratification is the cornerstone of compounding, a skill that feels almost unnatural in a world wired for instant rewards. Our brains evolved to prioritize immediate survival, not long-term planning. When you watch a chart tick by without you, your instincts scream that you're missing out, that inaction is failure. But the market doesn't reward instinct, it rewards restraint. Time is the crucible that reveals truth. In trading, in the short term, luck can make anyone look like a genius. Over the long term, only discipline prevails. Time humbles the overconfident and elevates the patient, rewarding those who show up consistently, even when the process feels futile. Patience in trading isn't passive, it's an active choice, a deliberate act of restraint. It's choosing to wait for your setup, letting a trade unfold without interference, and ignoring the market's noise. Every moment you resist the urge to act impulsively, you gain an edge over the traders who can't. Their impatience becomes your profit, their emotional trades your opportunity. Delayed gratification is what allows compounding to flourish. Without it, you can't sustain the consistency needed for exponential growth. You can't multiply an account if you keep disrupting the process with emotional detours. A legendary trader once said, "It's not about how often you trade, it's about how long you can sit." The big money isn't made in frenetic action but in patient holding, in trusting your edge to play out over time. Sitting is hard not because it's physically demanding but because it requires faith in your plan, your process, and the power of time. It's like tending a garden, you can't yank the plants from the soil to check their progress. You water them, protect them, and let time work its magic. Impatience demands constant feedback, but progress in trading is often silent. You don't feel yourself becoming more disciplined day by day, but 6 months later, you notice your reactions have changed. You don't see your account stabilizing in real time, But a year later, your drawdowns are smaller, your profits steadier. That's time doing its quiet work. The hardest part of compounding isn't waiting for profits, it's surviving the wait itself. You'll face doubt, boredom, and the temptation to compare yourself to others flaunting quick gains. The market's greatest illusion is that action equals progress, that more trades mean more success. In reality, the quiet traders, the ones who can wait, who can trust their process, are the ones who grow the most. This principle holds true in life as well. The student who studies consistently outperforms the one who crams. The athlete who trains daily surpasses the one who relies on sporadic bursts of effort. Time never forgets consistency, it compounds it, quietly and relentlessly. One of the greatest tests of patience in trading is holding a winning trade. Most traders can't do it. At the first sign of a retracement, they panic, fearing the loss of unrealized profits. But great traders know that letting winners run is where compounding accelerates. It's not about winning more trades, it's about maximizing the ones you've already won. Closing a trade early isn't protecting profits, it's protecting your emotions, paying a tax for comfort that stifles growth. Patience is the courage to watch the market ebb and flow, trusting that your plan remains valid. That's the emotional control that turns modest accounts into empires. Time also reveals your relationship with discipline. Anyone can follow a plan for a week, but few can sustain it for a year. Compounding rewards longevity, not intensity. The longer you maintain disciplined habits, the more they compound, becoming second nature. In the beginning, discipline feels like a conscious effort, a battle against your impulses. Over time, it becomes instinctive, a part of who you are. This is the psychological compounding of patience, where every act of restraint strengthens your self-control, every adherence to your plan builds confidence, and every small victory reinforces resilience. These are the invisible wins that shape your trading far more than any single profit. Consider two traders again. Trader A is a whirlwind of activity, scalping every market move, chasing the thrill of constant action. Trader B is methodical, taking fewer trades, adhering to strict rules, and waiting patiently for high-probability setups. After a month, Trader A has more trades and more excitement, but Trader B has consistency. After 6 months, Trader A's results resemble a chaotic roller coaster, sharp peaks followed by devastating crashes. Trader B's growth is slow but steady, a gentle upward curve. After a year, Trader A is either burned out or broke. While Trader B is compounding, their account and confidence growing in tandem. The market isn't about speed, it's about staying power. The longer you remain emotionally stable, the more your edge can manifest. Most traders overestimate what intensity can achieve in the short term and underestimate what consistency can accomplish over time. They believe that working harder, trading more, or taking bigger risks will fast-track their success. But the market doesn't reward effort, it rewards endurance. The power of patience reveals itself in small, seemingly trivial moments, not reacting to every price tick, not forcing a trade when the setup isn't there, not obsessing over your profit every 5 minutes. These moments are the seeds of compounding, planted in the soil of discipline and watered by time. Attention is your most valuable currency in trading. Every time you squander it on fear, greed, or overthinking, you lose focus. Every time you channel it into patience, you build wealth, not instantly, but inevitably. Time is also the ultimate risk manager, filtering out reckless behavior. An impatient trader increases their exposure, breaks rules, and eventually wipes out. A patient trader survives, learning and adapting with each trade. Survival is the unsung hero of compounding. You can't multiply what's gone. The paradox of compounding is that it feels like nothing is happening for a long time, only for everything to happen at once. The early months are flat, even discouraging. Then, suddenly, your consistency pays off. Like a savings account accruing interest at an accelerating rate. That's the invisible curve of patience turning exponential. Most traders abandon the process just before this curve emerges. They switch strategies, break rules, or withdraw their capital, interrupting the cycle that was poised to reward them. It's like halting a marathon meters from the finish line, exhausted and convinced the race isn't worth running. But in trading, you're never just waiting, you're building. Every moment of patience hones your skill. Every disciplined decision reinforces your control. Every boring day strengthens the mental framework that will carry you to financial power. Time isn't just an ally, it's your co-creator. You supply the discipline, time supplies the growth. When you internalize this, your relationship with trading transforms. You stop chasing the next big move, stop feeling anxious when you're not in a trade, and start appreciating the silence between opportunities. The real money isn't made in the market's chaos but in the consistency of your approach. Patience reshapes how you perceive the charts. What once felt like a battlefield of unpredictability becomes a landscape of probabilities. You stop asking, "When will I win?" and start asking, "How long can I stay disciplined?" This is the hallmark of long-term winners, their alliance with time. The market doesn't care who's smarter, it cares who's still standing when the impatient have fallen. Compounding doesn't demand perfection, it demands persistence. Time will multiply your efforts, but only if you remain in the game. The next time impatience grips you, remind yourself that the money isn't in the next trade, it's in the next 1,000 disciplined decisions. Time will transform those choices into results if you give it the chance. Patience isn't about waiting for the perfect moment, it's about becoming the trader who's ready when that moment arrives. And when it does, when your preparation intersects with opportunity, compounding becomes an unstoppable force. Traders chase freedom, the freedom to leave their jobs, to live life on their terms, to answer to no one but themselves. But the harder they chase, the more elusive it becomes. Freedom isn't found in reckless pursuit of results, it's forged in the quiet discipline of compounding. The true power of compounding lies not just in growing your account but in reshaping your mindset. It's the slow, transformative journey from reacting emotionally to acting with intention. Every time you follow your plan despite fear, every trade you close according to your rules rather than your impulses. You're not just protecting your capital, you're building a mental framework that compounds into true freedom. Discipline is the seed, time is the fertile soil, and compounding is the harvest. The market doesn't reward intelligence alone, it rewards consistency, the ability to execute a plan without needing constant excitement. It celebrates the trader who can tolerate boredom, who finds power in routine. Behind every calm, successful trader is a mind trained to detach from outcomes and trust the process. The profitable traders you admire weren't born with superhuman abilities. They simply outlasted the chaos, mastering themselves before mastering the market. Their wealth followed as a natural consequence. Compounding is a way of life, not just a financial tool. It's the art of making small, deliberate improvements that seem Trivial today but become transformative over years. You can't see compounding's effects in a single day, but you feel its impact over time. Most traders fail. Not because they lack skill but because they reset their progress too often. They blow accounts, switch strategies, or abandon the process, never allowing time to work its magic. It's like planting a tree and uprooting it every week. Frustrated that it hasn't grown. To compound, you must commit, not just to trading, but to becoming a person of patience, self-awareness, and emotional discipline. Someone who remains steady when others panic, who understands that results come from alignment, not force. Compounding is slow, and that's its strength. It rewards the rare few who can endure long after others have given up. Most people can't handle gradual success, it feels too uncertain, too intangible. But slow success is the only kind that endures. The trader who compounds small wins daily will always outpace the one chasing windfalls. Consistency breeds predictability, predictability fosters confidence, and confidence sharpens decision-making. Compounding doesn't just apply to money, it applies to who you are. The trader who journals their trades compounds self-awareness. The one who learns from emotional missteps compounds discipline. The one who accepts losses without spiraling compounds resilience. These invisible habits shape your destiny far more than any chart pattern. Motivation is fleeting, a spark that fades under pressure. Systems, however, compound. Motivation is an emotional high. Compounding is a repetitive practice. You don't need to feel inspired to follow your plan, you just need to do it. Each repetition strengthens the mental muscle that will carry you through the market's toughest storms. There's a quiet power in routine, a strength that emerges when excitement no longer drives your actions. Boredom becomes a badge of control, a sign that you've tamed your impulses and let the process take over. That's when compounding begins to work. It's silent magic. At some point, a remarkable shift occurs. You stop obsessing over quick profits or checking your balance compulsively. You stop panicking when the market moves against you. You begin to trust the rhythm, your system, your plan, your experience. That's when compounding transcends numbers and becomes a mindset. You're no longer trading to get rich, you're trading to stay consistent. And paradoxically, that's what builds wealth. The market bends to the disciplined, not because they're lucky, but because they've earned the right to wait for probabilities to unfold. There's a deeper layer to compounding, the emotional dimension. Every time you resist the urge to revenge trade, you compound emotional intelligence. Every time you accept a stop-loss with grace, you compound humility. Every time you temper greed after a winning streak, you compound maturity. These are the unseen victories that don't appear in your equity curve but define your financial future. One day, you'll look back and notice something extraordinary. The charts that once triggered anxiety now spark calm. The drawdowns that once felt like disasters now feel like opportunities. That's the quiet compounding of emotional mastery, built not in a single moment but over countless disciplined choices. Most traders never reach this level because they underestimate the time mastery requires. The market doesn't care about your timeline, it cares about your patterns. If your patterns are disciplined, time amplifies your success. If they're emotional, time magnifies your mistakes. Compounding is neutral, a force that multiplies whatever you feed it. Every disciplined action improves your future, every impulsive one erodes it. Like gravity, it's always at work, you choose the direction. The core lesson is this: compounding isn't a financial trick, it's a psychological lifestyle. It's the realization that small, repetitive, unglamorous actions create exponential outcomes. The longer you stay consistent, the more unstoppable you become. Freedom, the kind every trader dreams of, isn't the absence of discipline but its mastery. When you've conquered your impulses, you no longer need external validation or fleeting motivation. You no longer fear losses or crave wins. You become a trader who trusts the process so deeply that the market's chaos can't shake your inner calm. That's the true reward of compounding, not just wealth, but peace, the quiet confidence that time is building something greater than you can see today. So, keep showing up. Keep executing the small, disciplined choices. Keep letting patience work its silent alchemy. Compounding doesn't shout its presence, it whispers, rewarding those who listen long enough to hear it. The market will test your resolve, but your mindset determines whether you merely survive or truly thrive. Will you chase fleeting profits like the crowd, or will you let compounding make you unstoppable? The choice is yours, and so is the future it creates.